called the pill factory of the world thanks to the fact that Indian companies have been able to offer best-in-class cheap drugs, bringing down the cost of healthcare. But in the future, experts believe that companies like Lupin will have to do a lot more to break into the big league.
In the top 5 global generic companies, there isn't still a single Indian company. The lessons learned from companies like Teva and Mylan clearly point to 2 or 3 things that are important for them to get into that global top 5. One is to focus on aggressive acquisitions. Try and make sure that they're able to make large-scale acquisitions and make them work. That's very important. Second is very aggressive portfolio management, making sure they're able to launch products, have a large basket of products and launch them on time every time. And the third is actually developing a global operations and operating model scale, which means they will need to make sure that they're not just focused on an India-centric approach, but an India and world-centric approach to be able to get into that size and scale as the global biggies in the generic space. In the long run, Indian companies obviously need to not just restrict themselves to the generic space, but actually focus on becoming a top 5 pharma company. And for that, the investments in discovering new chemical entities, in new products, that needs to pay off. Till that day that doesn't get paid off and there isn't an NCE from India launched in the world, Indian companies will find it hard to be relevant in the global pharma world.
Sriram also believes that for companies that have globalized late, higher margin segments like branded generics will be the best bets going ahead.
Very clearly, the generics industry is moving towards commoditization. So plain vanilla generics is unlikely to be a large margin driver for companies. So for companies, and especially the companies which come late into the game, the second wave of companies, it's very important that they focus on specialty generics, hard to make complex products, focus on margin upliftment by focusing more on branded generics segments, try and build size and scale there, and therefore use brand as a power to get some amount of margin uplift. And third, focus on geographies which are very high margin geographies, so that they're able to get a larger share of the pie, low penetrated generics market, get there faster and earlier so as to be able to get a larger margin. Over a period of time, these companies are going to be under immense pressure from their shareholders to deliver superior returns. Doing what they've done for the last 10 years is unlikely to get them there. They have to be able to move up the value chain and move up the game to be able to get to a much higher margin area.
While Lupin seems to be on the right track for now, the new generation leading the company have a clear focus on new markets and also at the core. Catch the story on Inside India's best-known companies at these times only on Bloomberg TV India.
Presented by Accenture. High performance delivered.